I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of good opportunities and ideas for you throughout the show. Stock market surge continues. It's been 2 weeks. We were on vacation the previous week, and the S&P 500, the NASDAQ, the Russell, they have continued to surge. S&P up, NASDAQ up about 3% on the week. The Russell, even though a little bit softer on Friday, finally has a giant move, 5% on the week. It's 20% in the last 5 weeks, and it was just a couple of weeks ago when we said it had a massive gain of 12%, and said, well, why can't it make another 12%, targeting somewhere over 1,400 in the Russell, and sure enough, moves up to that level, very close to it, within 8 points this week. S&P 500, our target was 2224 to 2242, and gets up and surpasses that level. A little bit more on that later on, of course. We did say that the bond market decline, which continued this week, pretty much lined up to year end, and that it was a big source of funds for the stock market as the investment managers bail out of the bond market using the funds to go into stocks, and 10-year yield up to 2.46 this week. 30-year bonds down about 2 points on the week. Bounce comes and it fails. Big number at about 147.16 on the 30-year. We'll talk a little bit more about that later on too. Precious metals still under a lot of pressure as the dollar is still stronger. Silver is better. Remember, silver is an industrial metal. We've talked a lot about that in the last weeks, and even set up a trade that we talked about, at least buying silver and shorting gold, and that has really worked nicely. Thanks to everybody who sent me emails on that. So the dollar had a bit of a dip. It has regained strength, but we think that soon we're going to get a minor correction in the dollar. It's probably going to help those precious metals with a bounce, and a bigger downside correction we think in the dollar coming in 2017. Of course, we'll mention that as we do our year-end show coming up in just a few weeks. Oil, midweek swoon, and then a late rebound, just down a couple pennies on the week. Not a big deal there. We think there's a lot of risk after the OPEC producing nations deal of cheating coming in there. So we don't see at the moment a lot of upside as potentially some correction coming in the oil market. We kind of think it's going to be range bound. We'll show you that range in the short-term view. And another issue there is that as oil gets above $50, it kind of opens the spigots for the shale producers that got so beaten up by OPEC pushing that price down till now. So they've given up on that. Supply is likely to really start to pour out from those producers, and that's probably going to keep some weight on the oil market also. So before the election, I talked so much about how I didn't want Hillary Clinton to get elected, right? I mean, I was so afraid of her continuing the policies of the Obama administration and essentially intervening in the economy, the FOMC having a ton of power, the horrible Obamacare that was, killing employment and killing companies, and all of the intervention of QE and keeping interest rates low for 8 years. So I was really worried about her being, and it's the same kind of interventionist in that way. Well, our president-elect, we'll call him the interventionist-elect, is in his own way maybe just as bad and in some ways not worse. He's not a military interventionist, but he is an economic interventionist and absolutely huge, talking about $1 trillion in fiscal stimulus, which is the policies of the left, which they got so criticized before and even by me, when the economy went south, because I believe it needs to purge and get organic growth. But now this 0.8 years later, he's getting away with the potential for that type of intervention into the economy. Of course, FOMC, there's intervention there, and that remains because he hasn't said anything about firing Janet Yellen, which I want him to do like tomorrow. Oh, he's not going to be elected till not going to be put in office until in January. But I think I want him to do it at that point, and he's backing off on that, talking about letting her stay in until February of 18 when her term is over with, which annoys me. I can't tell you. So I think Donald Trump is going to bring his own kind of chaos. Yes, markets moving up sharply right now. A huge scramble as investors, fund managers got caught leaning, thinking that the Hillary Clinton would be elected, and don't worry about Donald Trump. And then when he got elected and the market started going up and bond market collapsing, everybody was positioned wrong, and so they really got caught leaning. But Donald J. Trump, he's out there warning of consequences to U.S. Companies if they leave the U.S. He's warning of that. Can you imagine telling them about consequences? That's very interventionist. Warning drug companies about pricing. We'll talk a little bit more about that also. He's essentially doing the same thing Hillary Clinton did there. Warns about 35% tariffs to companies doing business outside of the country. His tax cuts are fantastic, but the prospect of all that spending, all that interventionism that can slow down the economy, certainly it really has us looking at the potential for much bigger deficits down the road. I got to tell you, all that is scary. We don't know what he's going to be able to get through Congress because some of those hardliners, budget balancers, are going to get in his way. Yeah, we have a panic going on in the S&P 500. The market's on the upside as stocks just keep getting bought and bought. But I got to tell you, I think this panic is going to end sometime early in the year, and it's going to look a lot different. Maybe we get to 2290 in the S&P 500 first. It's only a few percent, and I think that is a possibility as the panic continues. Early part of the year, watch out. All right, so now let's look at what happened to the stock market this past week as we look at our 60-minute chart of the S&P 500. And this is a unique chart for people that are watching us for the first time, as this looks at the intraday and the daily trading during the day, and also has some notes in here about what has been moving the markets. It's very, very clear, right, what the stock market did this week, all the way through the last hour coming in here on Friday. Well, yep, it was an up week. We had the Italian referendum right over here, and the market sold off basically on the fact that it was a no vote, but pretty much just like we saw in the Brexit, which reversed, took a while, Trump, which reversed, took minutes when he got elected. Well, the buying then started to come in right over here, and the markets were really strong. Renzi, he says he's going to resign, and then he kind of backs off on that, and we don't really know when he's going to step down, if he is. And then Draghi comes out, and he gives a hint that he's going to extend QE into late 17, which later in the week he did do, but he made some adjustment to that. We saw markets overall mixed on Tuesday, as the Italian vote didn't do a lot of damage in here, and there are many, many more votes to come, but the stock market did look a little bit better also there on Tuesday. There was some talk about help for the Italian banks on Wednesday, and when that kind of hit in here, the stock market took off. There was really an upside panic in here in buying, and the Eurozone markets were really strong. strong. S&P 500 explodes. That's the day it actually hit our target right up over here, and just moved through it for the rest of the week. That was a giant move in there, and on Thursday was the day the Russell soared. Stock market continued up. The European market still strong, and it didn't. The fact that the ECB came out and they said that they're cutting QE starting next year to 60 billion from their 80 billion euro didn't stop anything. Draghi talks about uncertainty everywhere into 2017, similar to what I said in here. He is one of the master manipulators, so I don't like anything he says. He says Trump and the Italian referendum and EU elections coming up, all a problem, and that Italy has to deal with their own issues, and that's essentially what Merkel is saying also. So bonds absolutely slammed again, but the Russell soars. It just explodes to up 20-something points on the day. It was just a huge uptrend. And then Friday, the stocks are quiet. They look like they were pulling back, but then they get a bid late in the day, as seemingly that they always do, and we get this upside move. We'll see what the final hour looks like, but it's actually the final half hour because we're in the final hour as I'm recording this. So uptrend absolutely continuing, really, really strong. So we're going to take a look now at our calendar for the coming week, and of course there is a big event coming this week. There are earnings reports, Adobe and Oracle after the close Thursday. That's really all in our 320 stocks that we look at of the major stocks that are traded. The only market moving event is coming in here, the FOMC on 2 o'clock Eastern time on Wednesday, and the press conference will be at 2:30. That is going to be an interesting day. So historically, what happens is that when there's been big moves in the bond market anticipating something happening by the Fed, and the Fed is well behind the curve right now, I would say the odds and the market pricing in the odds of a rate increase this coming Wednesday are 100%. And I think that's absolutely going to happen. If they don't do it, they have no credibility at all. I don't even know what they'd be looking at. So the odds are very high that they're going to raise. Now, what happens normally is that it's already priced in the market, right? So I kind of think that the bond market is going to rally when the news comes out. Maybe for a moment they'll sell off, but I think overall that's the point in time that we're likely to make some important low price. At the same time, since the bond market has been fuel for the stock market, money coming in, there could be a reverse flow on that day. And maybe starting that day for a little while for some correction in the stock market, because the money flowing into bonds then likely will be coming out of stocks, out of the dollar, a whole reverse flow to what we've seen in here. And that could start Wednesday and maybe last for a little while. So that's kind of what we're looking at for this coming week, Wednesday being that big day, and maybe a reversal day for some of the markets. That's it for our opening segment, and I'll be right back with the best and worst stocks for the week. For the best of the week, the giant winner was Lululemon. Beat on earnings, revenues, analysts all over this one upgrading it. Really interesting in how our cycle analysis had it down near a bottom, and well, there was kind of no way that we knew it was going to have this kind of an upside move. Take a look at this chart. We had the support zone in there for a while, and our cyclical analysis was suggestive of the fact that the decline that we were in this period right in here was ending, and that we were getting into a new rising phase. It took a while to get going as it hung around in that support zone for some 2 months, but then exploded on the upside on that news. So 24% gain on the week, just a giant mover on that earnings report. Also, Ciena gets a big upside move. That's CIEN. This is in the networking category. Take a look at this big move. It tried to get a breakdown going, actually. The cycle in here was late. Right over there was the bottom, you can see, and this rising phase came late, and it even tried to break down as it tested the low, but then the earnings come out and it misses. Can you imagine that? Well, yeah, they missed on earnings, but their order backlog was super strong. So it would be pretty easy on the earnings report to see it initially as not so good. But man, when you saw the backlog, that really projects for some better earnings going forward. So the stock gains 19% on the week. A group that has been absolutely awful, especially coming into the election time, was the solar stocks. SunPower, SPWR, they come out and say that they are going to be cutting costs, lowering their workforce. This stock up 15% on the week. Now, it's when you look at this, you see the huge decline in here, right? And President-elect Trump is not going to be great for this group. Still, this pattern in here was suggestive this declining period was ending. We talked about that all along the way, and that it would be turning up again. So it's likely that this group will continue to do better. Our favorite in here was CSIQ. Still remains to be so, though I don't think it's going to be over with in there on the downside. CSIQ up 14% on the week. First Solar up 11% on the week. You got to think about this, though. Here we are towards the end of the year, right? We've got some 2.5, 3 weeks to go before the end of the year. And in a year where it's likely that the highest tax rates we're going to see for a long time are in this year, it's better to take losses in this year. So these stocks, which are so beaten up, especially in this solar group, they're probably not going to take off until January. We're going to be looking for some buying opportunities in these and some oversold stocks coming into the end of the year. And I would kind of wait on these solar stocks, even though they had a really good week. Going back into the technology category, Autodesk, that stock, ADSK, was up 15% on the week. Analysts have upgraded this stock. There was a bottom in that stock 2 weeks ago. This one looks a lot like that Sienna pattern that looked like it was trying to break down and then did not break down. You can see in here that the low period was supposed to be right in here in this bullish cycle. What makes it a bullish cycle? Well, you can see when it rallies and comes down, finishes the corrective period way above where it started, that's bullish. That says you're going to move to a new high. It easily did that and did another bullish pattern. It tests the low here, which is scary to us, but didn't break, and then comes up here on its earnings report and has a very big upside move in there. So we're liking that Autodesk pattern. It's been good, and I want you to note in here something else. You know, we use the 89-day moving average. Well, look what it did. Came right down there and tested the 89-day moving average and then exploded off of it. That's often a good area to be looking for support, and when it didn't break down under that low, that was a good thing. And then you got this big launch to the upside on the earnings on the analysts upgrading that stock. So that's 15% gainer for the week in Autodesk. The drillers had a big move on the upside. Also, Transocean, that's RIG, up 13%, and we had Noble Corp NE up about 12%. Those stocks, we did a special in this last week on the whole energy sector, looked at 24 different symbols, plus the OIH and the XLE, and did a really in-depth analysis of the group. Most of it was telling us that we're likely to get some little kind of a setback in here, probably in oil too. So that's what we're looking for. These drillers are quite overbought, and I would not chase them in here at all. We're looking for pullbacks in there. In that segment, we also looked at the refiners, and we were bullish on those and said specifically Valero and Tesoro, they look like stocks that could do well. Now Valero up 10% on the week, and this chart in here, it doesn't even want to wait for the corrective bottom. So we were looking for a low in about 2 weeks. That's this one right in here that bottomed early. There are very anxious buyers here in these refiners, and Valero, Tesoro looking the best of them. Tesoro up about 5% on the week, and we think that one is bullish also. Some other big gainers on the week, the teen retailers, Abercrombie up 11% on the week. That is still a weak pattern. AEO is a horrible pattern, and that stock was up 11% on the week also. We believe it's a sell. So why do we believe it's a sell? This is unusual when you get this big rally up in here and then you come down and almost take out this low, right? And then you get the bounce. So this is what right now what the cyclical pattern looks like. It looks like a big failure coming in here in AEO. And when I look at the daily chart where they came out with this weak outlook and this big downside gap, well, do you think the outlook is better in 5 days since that report? No, it's not. And we expect sellers to come back in, as you could see happened here on Friday. Now, momentum is turning a little bit positive in here, so it might take a little time before it rolls over again and gets hit. If it gets over this area, over 19, it's going to change it to a more positive pattern. I would say that's a very strong unlikelihood that it's going to do that. So AEO, we think in this area, it is a sell. Steels and airlines also had big weeks. Steels were in a massive surge to the upside. Airlines also, they're stalling now as steels look like they've run out of gas here. Maybe the airlines have also, at least temporarily. So we're looking for a pretty good pullback in the steel sector as they're already pricing in well beyond the potential $1 trillion of fiscal stimulus that Donald Trump has proposed. So they have just priced in something enormous in here, and we think that there's going to be some continued pullback in the steel group and some of the materials also. In uptrends, but overall overdone, overbought, and likely to get pullbacks. That's the best of the week, and I'll be right back with the worst. For the worst of the week, there's not all that much here. Really a strong market, of course, so not that many stocks got sold off really big. As a matter of fact, the big losers were in the gaming area. Win and LVS down about 7 and 8% each of them. Take a look at these charts. Interesting that they were quite volatile this week. Here is the Win chart. Now remember, we're looking at weekly charts in here. We've been in this yellow zone. That's this corrective period in here. And note that there's this dotted line. Okay, so there's another pattern in here, another cycle pattern that's shown up. And you could see this decline right in here. That's this here. And then it's tried to get a rise, and then this bigger pattern's pushing down. Yeah, that's what you do in cycles. You look for in phase and out of phase patterns, and then you've got a nested cycle due here right about the end of the year. Now, so this yellow zone has been a corrective zone. It hasn't given a lot of ground. LVS has been actually a better chart. But the news in here, Thursday, there was news that China was cracking down on ATM withdrawals, really reducing the amount of money that you could take out. Of course, that would mean less gambling in Macau. And then Friday they came out and said, well, they didn't do that. Well, in the meantime, the stocks tried to rally on Friday, and they could not. I want you to see the volatile week that we've had in here. So this is our daily patterns. Our daily patterns suggested that Win would decline for about another week. Look at this big break here and there on Win as it breaks down through support as on this money tightening. They've really been worried about money laundering there. So that's why they're preventing a lot of money from being taken out of the ATMs. You know what? I don't think that's going to last for very long. The reason is because the area of Macau is a huge revenue hog for China, and it's likely that there is not going to be a lot more downside. This is the LVS pattern. And excuse me, you can see in here this upward stair-step movement that you see in here, and this decline running out of time. That's this one right in here. We think that sometime in the next week or so, this is going to turn up again, and you're likely to see a move above this 63 area where that high was in LVS, and a breakout on the upside in Wynn Resorts. So this looks to us like a flush out going on right now in these stocks, and we're going to say that this is probably a time to start looking to accumulate those stocks, Las Vegas Sands and Wynn. We're going to look at ESRX. This is another newsy stock this week, and you can see in here that it's had a downturn that has had us believe that it's a significant downturn, as our cyclical projection points down to a decline into late January based on what we're seeing in here. Short seller Andrew Left tweeted about this stock, said that he thought it was going to 45, was on TV. Our pattern says sell sell also. And so we're in agreement with that. I don't know about 45, but right now I'll just talk about 63, 64 as a reasonable downside target. So we think this stock is a short. In the defense category, another interesting group of stocks in there, so they've had big gains, of course, is Donald Trump is out to end the sequester, which I think is a bunch of crap because it's was put in there in place to help with the budget deficit. And so these stocks had big gains. But for the week, we had Northrop Grumman, Lockheed Martin, and Raytheon all down 5%, 3%, 3%. So, there's a big question about how much defense spending they can actually pass. And we have 638 bases around the world. We're spending as much as the next 8 countries combined in defense. Why do we need more defense spending? Maybe you could tell me that. And what's really weird, because Donald Trump wants to build all these defenses, and at the same time, out of the other side of his mouth, he is a non-interventionist when it comes to military aspects, except for wiping out ISIS. So we don't really know what the truth is, and I think defense stocks have gone way too far, similar to steels, pricing in the Trump economy. So they are turning down, and I think that they pop up their heads. They're probably sales also. The drugs, the biotechs, the HMOs, they moved to the downside this week, and I think that the comments, scary comments, interventionist comments from Donald Trump talking about pricing, moving down the drug prices, is just taking over where Hillary Clinton left off, and then that is really started to put some pressure on them. They had a midweek swoon and then came back after having had big recoveries to the upside. I think that there is not a lot of upside left, and don't be surprised if more rhetoric comes out from Donald Trump and that whole healthcare drug sector takes it again on the downside. That is the worst of the week, and I'll be right back with our short-term view. All right, before we get into the short-term view for the coming week, I want to tell you about some changes that are going on. Some big changes, some small changes. We are going to continue to bring you the short-term view for the stock market as we have done before. We're adding to the analysis, showing a little more momentum studies, just to expand what we're showing. We are going to move the analysis of all 5 markets into our level 2 membership. Everybody who is a member now will continue to get that in its expanded version by just going in your dashboard starting next week, and you'll see an icon there that says short-term view for the coming week, so you'll be able to watch it right there. For people that are not a member, you are going to have to step up a little bit and become a level 2 member. I want to actually make that easy for you and let you see for 1 month all of our videos for half price. It's an incredible value, 30 something cents a day to just watch not only our short-term view expanded version in its fullness, but also all other 8 categories of videos that we do that will be in there. All the trader psychology and stock sectors and style strategy view and big picture analysis, everything. Over 250 videos in our library. You can have all of that for half price. That's $16.50. I mean, for 1 month to take a peek at that. If you haven't been a subscriber, it's for first-time subscribers only. So really take advantage of that. And moving forward, starting in the coming week, our short-term view in the regular show will be the stock market only. So I think you will enjoy the increase in analysis that we're doing. And I'm going to include that in today's show right now so you can get a sense for that. So we're going to start, as we always do, taking accountability of how we did in the previous week. Well, we weren't here last week. as we were on vacation. But when we look back 2 weeks, we talked a lot about that time period and what we thought was going to happen in the next couple of weeks. We're going to give ourselves a solid 80% in there, really. Light crude, we thought post OPEC it would not be able to make much more progress. It rallied for a couple of more days and fell off, started to chop. We were a little bit off on that one. Gold, we thought that it would test 1170 and bounce. It would be a temporary bottom. It broke a little below 1170, like 1161, and then did bounce, but actually failed pretty quickly. So it did pattern-wise what we thought. We kind of judge ourselves here by support resistance level, patterns, and overall trends. Is how we judge ourselves. The euro currency, we thought it would test support around 104.90 and then be a temporary bottom and bounce. Well, after the Italian vote, it traded 105 and just a few pennies above where we expected and exploded to 108 and then fell off again as it continued to fail, and there is continued risk, as we mentioned earlier in the show, like Draghi mentioned, about the whole Eurozone. So that was pretty spot on, though the rally, which we didn't think would get up into our sell zone, got right up into it and then rolled off. I'll show you that in just a couple seconds. The bond market, we said it was still in a major downtrend. Minor bounces would be just temporary. It would continue down. The bounces didn't come quite as high as we expected, but still pattern exactly right in there. And the stock market, SPX, we said small pullback and then new highs. Absolutely spot on. Perfect. We thought the VIX would be under continued downside pressure, and it really was that until late in the week when a few little bids started to come in for implied volatility, but still a lot of pressure there. So we did really pretty well a couple of weeks ago. All right, so what do we think about the next week? And we're going to add a little type of analysis in here for you to see. So here is the light crude chart on the daily chart, which is something we always start out showing you. And what we're looking at in here, let me just zoom out a little bit so you can get an idea of these bigger cycle patterns right in here. So you can see these big cycle patterns right in here. That's what we're looking at. You see the way that the light crude pattern followed very closely to those patterns that you see on the bottom. And there you see the same thing right in here. Man, was that great cycle action, really. And then you got the rally again. So here's the rally phases right in here. Beautiful, right? And as we get up to just right up near that same peak or just above where we got way back in October, way back. So here's the shorter term view in here. So what we're looking at right now is, pretty much what we expect, that this kind of half cycle that's pushing up right there is the rally we're in. It's also the smaller cycle. But then we get into this pattern right over here of correction. What that says to us is that, these patterns pushing up meeting this corrective pattern in here kind of keeps us in a range. So that's how we decide being range bound. We kind of think this area here, 52 to 52.70 on the upside, is where we think the resistance is. The support right over here, the top of this minor support, that's looks to us like about 49.50, where it got to a couple days ago. We think it's stuck in that range. We're kind of looking for this. You see our projection in there where it moves up and then moves down. So here's the new chart we're going to show you, and we might change this around as we move forward, but we're always talking about momentum, right? So this is a momentum chart. This is a interesting way to look at a variation of our slim ribbons. So we're looking at slim ribbons in here and looking at momentum. When it's red, it's negative momentum. When it's purple, it's kind of a neutral momentum. And when it's green, it's positive momentum. And you could see right now the oil market still short-term in positive momentum. This is a projection oscillator. We call it the best oscillator, and it helps us understand directional momentum also, where you go up and then come down and don't take out the low, but you turn up here, that's a positive directional momentum in here. And the bottom one is a market forecast indicator. We look for extreme overbought and oversold periods in multiple time frames. That's really what this is. And right now it's totally neutral. Nothing in there, no kind of a signal at all. As a matter of fact, if you go back and look at where there was a great signal, it's when all three of these indicators are down below the 20 number right here, and you could see that brought that upside explosion in the market right there. So it hasn't been a signal in there for a long time, except for this one right over here. So when you look at that, when it got oversold, when all three are under 20, it's oversold. And what happened? It moved sharply to the upside. So these are remember I showed you those cycles? Here's the cycles right in here. You just got to get used to looking at what we look at here. But I won't be showing you cycles on this one. But what I'm showing you is that we are in upside momentum, not really overbought and not oversold. And, we're talking about a range in light crude. So there's that light crude chart again. So now we're going to switch over to the gold chart /GC. And to get the proper alignment, really, I should have moved out to 2 years. So we're going to do that right now and look at these last cycle patterns right in here. So you can see the big cycle in there and how it was made up of the smaller patterns. Here's your big cycle right here, and then the smaller patterns as they line up there, nested low on all of them, and the rally, and then turns down, and it gives you a really sick look of the market. So now where we are right now is another nested low area. It is struggling to make a bottom. I have a feeling we're in a capitulation stage here on this short term. Usually when you get to these nested low periods, you're going to get a rally. Silver looks much better in here than gold looks. We're going to call for an up week in the gold market. We think it's going to get up to somewhere right over here. Now, the minor 23% fib is not much of a rally. That's 1185, 1190. We kind of think that's the best level. Silver, on the other hand, which is trading in the 1690s, could get up to 1740 or 1750. So we think that's probably a better one. It's getting sold off again today also. So you could see this is really acting poorly. And when you look at momentum in here, you can see that, well, the momentum in here has been negative, quite negative, and it has not relented yet. When you get these oversold conditions in the projection oscillator, and then you rally and you don't get any real kind of a bounce, you know how negative the momentum is in here also. And I want you to note that, like here, when they were all oversold on the market forecast, you started to get a decent bounce in there. You are getting very close to that right now. So again, we're looking for a bounce, and we think a bounce is likely to come. We're only talking about the 23% right over here, and the reason for that is because of the negative momentum. So we're only looking for a minor upside move in here, and we might just be getting sold out right now. So that is a look at gold, man. I hope you are enjoying that additional analysis. Let's take a look at the euro /6E. Now, this was very volatile. Remember, we had said we thought it would get down to 104.90. It actually gets down to 105.10 right there, and then explodes to the upside. That was kind of a double bottom. Gets up into our minor sell zone, which was crazy that it got up into that area, and then rolls over. So what we're looking at here, this is really, the momentum in here is poor. I'll show you that also. We think it'll probably, try to test this 105 area again, but we're looking for kind of an up week and then roll over again. We think it'll try to rally and fail, but we don't think that there's a lot of upside in here also. Just something like this and then roll over again. It's going to have to get above this level to turn anything positive, and I think the chances of that are very low. And breaking under 104.90 and staying there is going to be the ugliness that we think really exists in this particular contract. So the momentum in here, you could see it tried to go neutral but then turn negative again, and we're getting to a place of very oversold. So we kind of think that we're in this bouncing area. When it got down to very oversold right over here, and you got that market forecast signal, it took a few days, but then you did get a bounce. We're getting very close to that. Note the signal right over here when all three get under 20, and you got the bounce right over there. So we are, here's the same thing right over here, and you got the bounce right here. So we're at a bouncing point in here, but we just don't think in this condition of negative momentum that the bounces are going to be all that good. So that is a look at the euro currency, which gets up into our sell zone and then fails. So that's really good. /ZN, we're going to look here at the 10-year. Take a look here at these patterns. Now, we have been looking for a decline late into the year all along. This pattern in here is suggestive of the fact that we could get a bottom in the intermediate and the short-term patterns all at once. That would come sometime in the next, let's say, 4 to 8 days based on these patterns that we're looking at. Anyway, we're looking for a bounce in here. It's really hard to call. We don't know if it's going to be in the coming week that the lows are made on the intermediate pattern and the short term, or it's going to just edge out to the following week after that and then turn up. So that's kind of what we're looking for. We're going to still look for 1 to 2 weeks of intermediate negative pattern. We're looking for the downside in here over this next week or so to potentially hit 123.17 on the ZNs, and on the ZBs a 147.16. So those are still in this heavy downward pressure. Here's the ZN. Note that the momentum turned very negative way up over here on the ZNs. That was back in the beginning of October, and it's just fallen for basically 2 months after that. So all of this would have kept you on the short side. I know a lot of people that watch our shows have been on the short side here on this negative momentum and intermediate declining situation. And there has been every single one of these overbought areas right in here and right in here and right in here have brought lower and lower prices. That declares the downside momentum in there also. When it got very oversold on the market forecast in November, you could only get a few day bounce. It gave you absolutely nothing, which was very cautionary. We're getting oversold again, but not quite there yet, as the short term, the intermediate term is about 32. It needs to get under 20 to give you a signal with the other two. So all of that looks really negative. If I just switch this over to the ZBs, you're going to see a similar pattern in here as it has continued to truck on the downside. And here is that ZB pattern, and here is that really deep support level 145.24, which we doubt that it's going to get that low. We think 147.5 is a support area that is important on the weekly chart. And there's a little peek at our weekly chart in there for the people that don't often get to see that based on the fact that this is a short-term view. So that's a look at the ZNs and the ZBs. So now we want to take a look at the short-term view of the stock market. We had said that we thought that the pattern on the upside was positive, was very likely that it was going to continue on the upside. It certainly did so, as there has been just a nice, some people would say not nice, because I know there are a lot of shorts out there, but a huge amount of buying that has come into the market. And as we said, investors caught leaning, analysts caught leaning, and at some points I was also, but I follow the analysis because, as I said yesterday in our video, I'm really bull-bear agnostic. I do whatever the charts say, and I bring that analysis to you, whatever the charts say. And they said to be bullish. So S&P 500 SPX, we thought it was going to move to the upside, and it did actually continue to do that. So the shorter term patterns are starting to align right now better. That's this right in here, and that low comes right there, and that rally right in here. So our rising support level is at about, we'll call it 2, right over there around 230 down to 222 right in here. That's a minor support. We're looking at this right in here as a potential correction. Now maybe it comes after the Fed acts, And then you have another bigger pattern right over here that may extend that out. So we're looking at the potential for something like this kind of a week coming up. And we think that the corrections are going to get it down into that minor support. That is going to, probably pull down the Russell finally, and the NASDAQ giving some ground. Also, it's been, of course, one of the weaker ones. But overall, this has been a sharp rising period in here, and the gains have been just enormous when you look at it coming up from this area of about 2080 all the way up to 2258. So 178 points in the S&P 500 in this brief period of time. I want to come back over here where I showed you past rally when we looked at this one right in here, and what I said to you is that you get like a 15-day rally, you have a correction, and then move up to new highs again. Well, that's last July and August, and then that pattern absolutely happened again, and looks like a really strong pattern developed as it was supposed to, and that's why I was positive. And our resistances on the weekly chart, or our targets, were 2224 to 2242. It did get through those levels, and our new numbers in there are, like I said in the beginning of the show, around 2285 to 90, and we think that it could get there before this is all over with. Look at the momentum in here. So when this turned positive right here, you could see, well, there's the green arrow that turned positive right at that point. That was back in early November. Momentum turned up. Here's your sell where the huge decline in this red zone got you oversold, and the market forecast gave a bullish signal, and it took off right there. So the market forecast was ahead of momentum, but momentum turned positive in there, and you could see in that green area in the stock market, the momentum is still positive. Take a look at RUT momentum, and you'll see extraordinary and not overbought. As there's some internal correction going on in there in the Russell. Maybe you still get more, but I don't think it's over with. NDX, you could see right in here, it struggled. Notice it went into a red zone right there, but now it's turned positive again, and not overbought in the NASDAQ either. So that's a look you could see at the momentum in the S&P 500. And here is your S&P 500 chart. And again, our upside target for the S&P 500 right now is around the area of 2285 to 2290. That probably is after some corrective pullback that we're expecting in the next week. I hope you've enjoyed that expanded short-term view where we actually bring in some of our momentum studies for you to see that help us get a sense for market condition, direction, trend, momentum, the kind of things that you need to keep you on the right side of the market, to keep you out of trouble, and to help you adjust positions, especially if you're option traders. You don't want to be on the wrong side of this momentum when it comes, especially when it's this powerful on the upside. Remember that starting in the coming week, that this segment is going to be for members. And I will still do a segment on the S&P 500, so I'll give my short-term stock market opinion. But to get this full picture of the 5 major markets, with even a little bit more expanded in there, I think that you're going to want to become a member. Send me an email, ask me for the link for half price. And you'll be able to get 1 month of all of our videos, not only this video with our expanded short-term view, but all 8 other categories of videos with just a tremendous amount of learning that you'll be able to do in there. And of course, our Future Speak that every Wednesday we look at 23, 24 different futures contracts, and that's always in-depth cycle analysis. So I think that you are absolutely going to enjoy it, and you really can't afford not to do that for $16.50 for the first month at half price. So please do become a subscriber, support us, support our teams in here, and help askSlim continue to be the amazing content provider that it is. That's it for the week. We're always wishing you a great week. It is crazy out there, and we're wishing you great trading.
Well, I'm going to the city and I'm going to do a city show. And make some dough. I've been cruising